Major developments right now as it relates to what people have to pay for their energy. I'm going to talk about that and so much more. The first thing is the United States coming to Europe's rescue, or at least that's how it seems. The second thing is the inflation exaggeration. We're watching prices getting elevated to new heights, and so I'm going to show you some stats around it. And the third thing is, how can they stop the rising prices? Well, one individual has an important indicator to watch. I will cover that. I've got a lot of detail. Let's begin. First things first, European gas plunges as recent rally lures flotilla of US LNG. So if we go down, and I'll go back to this chart in just a second, European natural gas prices plunged more than 20% on Thursday as this year's stellar rally attracted a flotilla of US cargoes. And that was primarily the reason why this happened. And you could see what happened afterwards as a result of that. Take a look. Dutch front month gas. So essentially look at the futures. And this just shows you the euros per megawatt hour from 180 down to approximately 125 in such a short period of time. So this was just accelerating, as you can see on the chart. And then suddenly it declined. That's a good thing. Okay, that is a really good thing for anybody having to pay these insane prices. At least 10 vessels are heading to Europe, according to the ship tracking data. Another 20 ships appear to be crossing the Atlantic, but are yet to declare their final destinations. US cargoes of liquefied natural gas will help offset lower flows from Russia. So we'll see what happens here. This is the flotilla. You can look at that. And by the way, if you want to see this type of information with any of these types of ships, I don't know if this one is included in that, marine traffic. I've talked about this site numerous times before. I always share my sources with you. Marine traffic, okay? That's where you can look at this. And I look at the cargo ships and where they are, and how far they are off the ports and what they're doing and what type of cargo is being shipped and so on. Anyway, this is just showing us where this is moving to right now. And this is a good thing, like I said, for people that have to pay these prices. And, I was going to wait until later on in the episode, but you got to see this. It's, especially at this time of year, it just hurts to read this, but I want you to know. In the last year, about 20% of Americans struggled to pay their energy bill in full at least once. At the same time, 18% kept their house at a temperature that was either unhealthy or unsafe. So they paid the energy bill, but they kept the heating down to a level that they don't really want it at. And it's something so basic. Food, shelter, heating when it's cold outside, cooling when it's hot outside. I mean, this is not, a Rolls Royce. This is just basic things. But things have become so expensive today. And unfortunately, it looks like they're going to make it worse. Now, like I said, you've got this situation temporarily bringing the prices of gas down for Europe. That's great. That's fantastic. Let's hope it can continue to come down. As I've said before, the way for this to come down, let's say, I don't want to say permanently, but definitely for a long period of time, is to have some sort of recession, some sort of pullback on the amount of money being pumped out into the system. But they're trying to avoid that, aren't they? Anyway, more than 28% skipped a basic expense such as food or medicine to pay an energy bill in the last 12 months. I mean, I don't like talking about this stuff, but it's hard for me to talk about this stuff, but it's true. It's reality, and we need to face the music. If you've got a problem, what do? You stick your head in the sand, or you simply take it head on? What do you do? Let me know in the comments below. What type of person are you? Let's not be afraid of who we are. Let's embrace that. And if we want to go in a different direction with that, hopefully we can do that. Okay, US natural gas tumbles on bearish winter weather outlook. So there's a couple things going on. European gas drops as US LNG makes its way across the Atlantic. Trading on the gas market thins heading into the US holiday weekend, as well as the markets in general. This period of time, this is the S&P 500. But you see the volumes dropping throughout this period. And what they've said is historically, the moves tend to be a little bit more exaggerated. Whenever you have thin volumes, it always happens. Look at penny stocks. Penny stocks can go up like crazy, but the next day it could be worthless, right? So looking at this here just shows us what's been happening, okay? If you're interested, you can take a look. This is US natural gas falling on mild winter weather. Depends on where you are. Depends on where you are and the expectations and so on. But of course, it had peaked out here looking at this in October, and it has come down ever since. Like I said, that's a good thing. Nobody's going to say, hey, I'm upset I'm paying less for gas, all right? We expect the weather data will continue to bounce between colder and warmer trends for the first week of January in the coming days, making holding or the long Christmas holiday break extremely risky. So this is about the trading anyway, but I just think it's interesting. Then there's this. Texas refinery blast could help push the gas prices above $4 a gallon. So I heard about this actually from my subscribers first, and I was doing my research for this video and found this. A blast at a Texas oil refinery will probably push already high gasoline prices even further, although not immediately. So I want to see what happens here. Again, limited scenario, but it's still some people that are affected. If you are affected with this, please let us know in the comments below if there is anything significant that you want to mention. Energy beats the broader market for the first time in 5 years. Oil and gas stocks have risen faster than oil prices in 2021. Energy just spewing out the cash right now. Energy is big. Obviously, we've noticed that, something like lumber could just go up and it could go down and people could profit off of both directions, of course. But with, whatever this happens to be, let's just say, I always get this question all the time. For people asking about gold, asking about silver, and they say, should I buy gold mining stocks? I think you got to understand what you're trying, what are you trying to do? Is it just making money? Is it trying to, you like the gold? If you really like the gold, then you shouldn't be buying gold mining stocks as much, okay? You got to look at this differently. The stocks trade like stocks. Okay, they don't trade like the precious metals. That's not saying you can't make money. In fact, if you choose the right ones, you can make a lot of money. But that is very difficult. Okay, it's very difficult. That's why ETFs in that case do make it a little bit easier. But certainly, you got to diversify within. If you like energy, you got to start putting your money where you think it's right, but not in one place. Not in one place. I would not recommend that. Okay. Anyway, they just give you the details about that. I'm not going to get into all of them, but surely it's there for you if you want to check it out. All links are in the description under the sources. So this is just showing us the Netherlands natural gas, what has happened. I already showed you this, as well as this piece of information. Not news to any of the Money GPS subscribers, but inflation trader who nailed the 2021 call sees the risk of 7% US CPI. That is likely going to happen. We can see what goes on with inflation, and it is not good. Then even the PCE, the most manipulated of all inflation statistics, the one that the Federal Reserve loves to use, is at a rate we haven't seen since the 1980s. It's crazy. Look at that. And what does that mean? That means you have to pay more. And what happens when you pay more for stuff? Well, you've got less disposable income. And that shows up right here. Personal savings rate declining to a level we haven't seen for a few years. And I'm assuming this is probably going to continue down over the next little while. During this period, of course, people are spending more money buying gifts and all that. But it looks like it's going to be declining back down to levels, from quite a while ago. And what's the solution here? What are they going to do? Well, the Federal Reserve has one very interesting little tool. And Jim Bianco mentioned this. I wanted to just highlight this, give it a breakdown. And spoiler alert, interest rates are what we're talking about. Okay, so he gave us some interesting information, to say the least. The Fed does not have a choice. Inflation is out of the bag and it's killing the majority party. They have to respond and they will go too far and break something. This is the market message. What is the bond market telling us? I would argue that the Fed will hike rates so much in 2022 that they will break something and they don't really have a choice. Do you think that they will break something, that the Federal Reserve will go too far too fast? If you agree, hit that thumbs up button. And if you disagree, hit that thumbs down button. All right, why not? Let's have some fun. Take a look. This right here, this shows us from 2004 to 2006. They're hiking throughout this period. Okay, hiking all the way through. But what happens? Well, regarding the 10-year yield not rising, it is not an inflation signal and never has been. It is a break something signal. Always has been. Let's go to 2004, 2006. The Fed hiked 17 times in 17 meetings. 10-year was unchanged over the period and the curve inverted. Interesting. Different situation, certainly, but I just want to give you something to ponder. What is the terminal Fed funds rate? Well, here you can see the assumption is higher than 1.5%. Does anybody agree with that? Let me know. Okay, another misread is the terminal funds rate. The market is putting it around 1.75%. The Fed is good at hiking too much until something breaks. Well, I've got what I have noted personally for myself, just simply drawing a crude line. It looks like to me that the Federal Reserve is going to get to 0.75 to 1.0. And, maybe there's a problem at that time because they break something. They're saying that the market suggests 1.75%. I really don't know if they can get that high. I really don't. I don't know how. I don't know how they'll get up that high. The previous instance was 2.38%. So they didn't even really get to 2.5% at its absolute peak. And are they going to be able to get anywhere near that next time? Not so sure. Okay, then I had this one, which I showed you earlier, talking about the 20% of Americans unable to pay. And then here we have the US inflation adjusted spending stagnating as prices surge. Well, of course. But the interesting thing is that it comes at a time when people usually spend a lot of money. Well, what's happening? People are spending a lot of money on food and energy and their cars and everything. And of course, that has an impact on the economy as a whole, on individuals, on everything. So I worry about this. I'm concerned about it. But what can we do? We don't want to leave on this message, particularly at this time of year. Well, I've heard from so many people, lots of great suggestions. I want to hear from you as well. But I have a playlist called How to and Solutions. In that playlist, I believe it's the first video where I just went after one, after the other, after the other, after the other of really good, positive things that people can do. In fact, I'm going to link to it at the end of this one. Okay? There'll be a video there. You can watch it for yourself. Okay? This is really huge. This is really important. Things like growing a garden and things like, what about the fact that if you have a piece of land that is considered agriculture, maybe that's having one chicken, maybe that's making literally only $7,000 worth from the food that you grow on your property, it's considered agricultural land and you can get your property tax back. Depends on your jurisdiction and so on. You got to look that up. What if you have a little creek running through your property? You might be able to qualify to get some or all of that property tax back. I mean, there's so many different things that you can do. I talk about that in the How To and Solutions playlist, but I want to highlight one video in particular. If you appreciate that information, hit that thumbs up button. And this right here is the video to check out. So just click it and I will see you over there.